In the foreign exchange market, one of the terms you'll probably hear is investor, technical analysis, scalping, speculators, and so on. If you're speculating on the topic we're bringing to you today, then you're a speculator. With this, we welcome you to the Financial Market Examiner YouTube channel, where you learn about forex, crypto, and the stock market. Well, on this channel today, we'll get to know about speculators in forex. Let's get right into it. What is a speculator? A speculator utilizes strategies and typically a shorter term frame in an attempt to outperform traditional longer term investors. Speculators take on risk, especially with respect to anticipating future price movements, in the hope of making gains that are large enough to offset the risk. Speculators that take on excessive risks typically don't last long. Speculators exert control over long-term risks by employing various strategies such as position sizing, stop-loss orders, and monitoring the statistics of their trading performance. Speculators are typically sophisticated risk-taking individuals with expertise in the markets in which they are trading. I'll tell you some of the things you need to know about speculators. Speculators attempt to predict price changes and extract profit from the price moves in an asset. They may utilize leverage to magnify returns and losses, although this is a personal choice of the individual. And there are different types of speculators in the market. For example, individual traders can be a speculator. If they purchase a financial instrument for a short period of time with intentions of profiting from its price changes, market makers can also be considered speculators because they take the opposite position to market participants and profit from the difference in bid to ask spreads. Prop shops or proprietary trading firms can also be considered speculators because they use leverage to purchase securities and make profit from changes in their price. Normally, speculators operate in a shorter time frame than a traditional investor. For example, a person may call themselves an investor if they buy 20 strong companies and plan to hold those stocks for at least 10 years. Assuming the companies continue to perform well, a speculator on the other hand may use all their portfolio capital to buy 5 stocks or several futures contracts, expecting them to rise over the next few days, weeks, or months. Speculators typically utilize trading strategies that tell them when to buy, when to sell, and how big of a position to take. What then is speculation in forex trading? Speculations sometimes get confused with gambling. There is an important distinction though. If a trader is using untested methods to trade, often based on hunches or feelings, it's highly likely they are gambling. If they are gambling, the trader is likely to lose over the long run. Profitable speculations take a whole lot of work, but with proper strategies, it's possible to gain a reliable edge in the marketplace. Profitable speculators look for repeating patterns in the marketplace. They look for commonalities between many rising and falling prices in an attempt to use that information to profit from future ups and downs in price. It's detailed work. And because prices are always moving and there are nearly infinite variables to consider, each speculators often develop their own unique way of trading. What are the impacts of speculators in the forex market? If a speculator believes that a particular asset is going to increase in value, they may choose to purchase as much of the asset as possible. This activity, based on the perceived increase in demand, drives up the price of the particular asset, and if this activity is seen across markets as a positive sign, it may cause other traders to purchase the asset as well. Further elevating the price, it can result in a speculating bubble where the speculator activity has driven the price of an asset above its true value. The same can be seen in reverse. If a speculator believes a downward trend is on the horizon and that an asset is currently overpriced, they sell as much as the asset as possible while prices are higher. This act begins to lower the price of the assets. If other traders act similarly, the price will continue to fall until the activity in the market destabilizes. In this way, even many investors become speculators from time to time. They get caught up in the frenzy of the big ups and downs, while they may have initiated their position with the intention of being long-term investors. If they start to buy and sell solely because they think other people are buying or selling, they have entered the realm speculation, possibly even gambling, if they are unsure of what they are doing as opposed to investing. Speculation is the purchase of an asset with the hope that it will become more valuable shortly. It can also refer to short sales in which the speculator hopes for a decline in value. Many speculators pay little attention to the fundamental value of a security and instead focus purely on price movements. With this, we've come to the end of the video today, and I hope this video has been helpful so far. There are several educative videos on this channel where you can learn more about the financial markets. Please note that this video is not for financial advice, but for educational purposes only. Kindly subscribe, share, and like after watching. Thank you.